Welcome to the weekly recap brought to you by themortgagereal.com for the week ending February the 20th. What were the results of the stimulus plan being passed? What will happen if the banks become nationalized? And what was the fate this week of interest rates for home loans? Three great questions that we're getting a ton of questions being asked. Let's kind of just really quickly start this off. We want to direct you to the home page to go over the first time home buyer tax credit. Extremely significant because radical changes just made from last year's first time home buyer tax credit to this year's home buyer tax credit. Number one importance, it is non-repayable, meaning that you get an $8,000 tax credit when you go to file your taxes for 2009 and 2010, and you now have an $8,000 tax credit. That does become fully repayable if you sell your home within the 3 years. So we just wanted to break that down. There are more details, so make sure you look on the home page under the featured section for first time home buyer tax credit. Also, what were the other effects to the economic and stimulus plan for Housing and Recovery Act? Well, on the home page, again, we want to direct you there, and there's another full description of how it actually does impact housing and where we're going to see some of the benefits. Now, let's just talk about the biggest picture of all, this stimulus plan put in place. President Obama spoke on what he feels the sense of urgency is and where he feels it's going to have an impact and where it's going to come into play. Two things came to sight here. The feds extended the $500 billion we've been talking about that got allocated from January 1st to June 30th of this year by another $200 billion. That's a lifeline that probably will take us through this summer's housing market. So going from June probably till the end of August. We're hoping that those funds last until then. After that, we do have to say all bets are off. A lot of fears are striking right now as far as what's going to happen with inflation going into 2010. So definitely, we do want to keep pushing that this is going to be the time to refinance and purchase at these low interest rates. The dollar is going further. A lot of people are saying, hey, it's hard to get a loan, it's hard to get a loan. Well, we want to make sure that it's coming out from the right mouths and being directed toward the right people. If you have the down payment, you have the credit, you have the income. And I know a lot of people are worried about unemployment right now, but if you have the income, the credit, and the down payment of the 3.5% to qualify for an FHA loan, for instance, the financing is definitely still viable. Is it tightening? Yes, it is. Will it continue to tighten? Yes, it will. But here's the main thing we want to get out there. Housing's not coming to a standstill. People are still buying and selling homes on a daily basis. And it will continue to be this way. They did it when rates were at 15-20%, and they did it when rates were at 6.5% in the most encouraging market that we've ever seen, which has now ended up being the housing bubble. So housing will still evolve. Financing will evolve. Let's talk a little bit about the nationalization of banks. Will this come to fruition? Nobody knows. This is still yet to be played out and to see what's going to happen with the fate of Bank of America and Citibank. Here's what we do know. If you're going to a major commercial bank to do a refinance today, be prepared. It could take up to 4 months now. Underwriting is that slammed. Here's the biggest incentive. Going through a broker, a banker, they're now only turning at about 2 weeks, 3.5 weeks max. So 4 months compared to 3 weeks. What's the significance in this? The interest rates. Commercial banks are having to quote long-term because they can't handle the volumes. They don't have enough staffing to do the underwriting. And also, they just don't have the full commitment from what's going on in the marketplace. So they're having to quote long-term locks. You can still do a refinance within 60 days, 2 months, half the time of a commercial bank with your broker or banker. So we want to throw that out there because the commercial banks, even though yes, they are getting a ton of volume, there's still viable opportunities out there in the marketplace to probably get in a more aggressive rate or closing costs quoted to you in this marketplace. That's number one. Number two, time frames as far as purchases. We want to make sure that right now the market's changed significantly. Credit score tiers are being increased for approvals, and secondly, the income tiers are also being increased. So debt to income ratios are being very, very heavily scrutinized right now. If you had a pre-approval once before, may not be the same pre-approval that came about this Monday. Going into next week, if there's more changes, that same pre-approval might not be good anymore. So it's definitely the time where you have to be working with a professional who understands the marketplace. If you have questions about what's going on right now, you want a second opinion, we would love to be that resource. TheMortgageReal.com is here, and we're committed to making a difference for the current and future homeowners. We're going to continue to make that statement because that is our mission statement, and you will see this pledge continue to be repeated over and over and over, and you'll see the differences we're making because we're getting now the replies from Yelp.com where we're listed. We're getting feedback and testimonials coming onto the website. So we definitely are having the positive impact that we originally set out to have in the marketplace, and we're going to continue to that. So again, any questions, please feel free to ask us, email us, blog, whatever you want to do. We definitely want to be that viable resource. Stay tuned as there's a lot of breaking news. You can also follow us on Twitter.com. You can become one of our tweets, so to speak, and you will get the updates regularly. But make sure to check the homepage, as there's 3 main postings we came out with: the tax credit, with the Stimulus and Recovery Act of the housing markets, and just the overall stimulus plan and what the impacts it's going to have. The next big discussion, again, is going into next week. What is the fate of the banking systems right now, and how will it actually be either taken over by government or subsidized by government? What will the TARP funds ramifications be, if at any? We'll soon find out, because that's going to be played out here in the next weeks to come. Thank you very much, and we'll talk to you soon.